Lots of red on the local share market today. For his take, I spoke to Marcus Padley from Patersons Securities. Well, Marcus Padley, it's been a relentless sell-off during the day. What's been driving this?
Well, everything's getting it from everywhere at the moment. We have the banks for financials worrying about Eurozone sovereign debt problems again. But probably in the short term, the resources are getting belted because China is down 3% as I stand here today. And it's down 12% now, over 12% in the last 7 days. And there's fears of Chinese tightening. Their sort of money market rates are going up quite rapidly at the moment. And that's killing off the desire to be in resources at the moment, or the desire to be in any sort of risky currency like the Aussie dollar, Canadian dollar, all that sort of thing, and resources coming off with it.
All right, specific stocks and QR National Day 2 and a new high. Where's this price support coming from?
Well, the feeling is that it's index funds, but the truth is no one really knows. Some of those big institutions that appeared on the top 20 could easily be making their holdings more meaningful by buying in the market. You just don't know. There is some suspicion that the green shoe, which is the brokers or joint lead managers' ability to buy up to 6% of the company in order to stabilise the price, there is some suspicion that that has driven the price. But my experience of green shoes is they really are only there if the price falls to stabilise the price. I doubt very much that is driving the price. I'd be surprised actually with the performance so far, with almost a 10% premium, that they'd be in the market at all.
Now, Telstra has surged 3%. Is that just a defensive play, moving into a defensive stock, or something more there?
Look, very good day today against the market going down. It's up 7.5% since their AGM, which said the management thought the company was materially undervalued. They sort of reiterated their 28-cent dividend for the next 2 years, or reiterated their earnings guidance and talked about the NBN deal being finalised. I'm guessing at the moment it's going up because nothing else is, and they did hit a record low. The yield now, including franking, is 15%. Although the biggest mistake everyone's made in the last few years is buying Telstra for yield, of course. But you can put a case together to buy it, and maybe an NBN deal is around the corner. You know, it's a low-risk trade.
Now, billionaires seem to be piling into the 10 network. It's gone on the slide, though, today. Would you say it's still expensive, really?
Yes, it is. If you look through the media sector, most of the media stocks are on PEs of anywhere from sort of 11 to 13, 14, and Tech Network's got itself onto 17 times. It does look expensive. Basically, the billionaire activity has driven interest in the stock, and people are pricing in something that hasn't yet happened. And we don't know what the billionaires are going to do with the stock, but clearly people have already priced it in. So it is looking a bit expensive.
Always good to get your thoughts. Thank you, Marcus Padley, for joining Late Line Business.
My pleasure, Ticky.